Hey, what's up, everybody? I'm Cullum Costello. Thank you very much for tuning into the channel. Today, I'd like to talk to you about how to make some passive income selling options contracts in the stock market. Also, I'd please ask you to like and subscribe to the channel at any point, as it greatly helps us grow on YouTube, and I really appreciate it. Leave a comment down below and I'll get back to you. So now let's look at a little bit about what an options contract is and how to sell them for some passive income in the market. So here's a look at what a call option and a put option is. As you can see, each option has a buyer and a seller, or these are contracts, the seller being the writer of the contract. So each contract is worth 100 shares of stock, and it is agreed upon at a certain price called a strike price and has an expiration date. So if you're a buyer of a call option, you have the right to buy the stock at an agreed strike price. If you buy a call option, you want the stock to appreciate in value, and you pay a premium for this to the seller. The buyer always pays a premium to the seller for any contract. This premium right away goes into the seller's account, and the seller keeps that whether the contract is exercised or not. So being the seller of a contract, you collect a premium. So if I'm selling a put contract at a $10 strike price and it expires on a certain date, so say that strike price is $10 and the price of the stock on this expiration date is $11. Now the buyer of this put option, who has the option to sell me the stock at $10, does not want to do this because they'd be losing $1 with the intrinsic value of the contract itself. So this contract expires worthless. I then keep the premium that they paid me at the beginning of or whenever the contract was signed. If the contract is exercised, or say they agree to, I sell them a put contract for $10 and the stock is $9 now. Now they have the right to put the shares onto me for $10, and they keep the $100 of intrinsic value, as being the stock price was $9. So being the seller of options, you collect a premium right away that goes into your account, and this is how I've been making some passive income selling put options. However, this can be very risky, and I am not a financial advisor, so please don't go out and make trades because I said you can make money doing it. So let's take a look at an options chain, and we'll see how we can fill out one of these contracts, and we'll actually put one out on the market. So here we are looking at the ticker symbol CLSK, Clean Spark, the options chain for them. If you look right under the ticker symbol, you can see this is aftermarket, and they're trading at $15.05. We just did a video a couple days ago. The close on Friday, they were trading at $11.55. So if you look in the middle there, circled, you'll see October 16th would be the expiration date for these contracts. On the left there, you have your calls. On the right, you have your puts. And we're selling a put contract. Underneath the expiration date, you see a strike, which is the price that this strikes at, or which this contract would go into effect. So at $10, if you look to the right of that, $10 is underlined there underneath strike. You look to the right, you'll see bid and ask. So the bid is the amount of buyers out there, and that's what they're saying they'll pay for these contracts. You see 75 cents there. Well, that would be times 100, and that would be the premium for this contract. They're offering $75 because it's 100 shares times 75 cents. $75 for the option to put these shares onto you at $10 anytime from now to October 16th. So looking at the price, $15.05, this is a pretty low risk trade in my opinion. So they're offering 75 cents a contract. To the right of that, underneath the ask, you see 85 cents, which is $85 in premium that some people that are selling or writing these contracts are offering these contracts for. So if this contract goes through and I sell a $10 put at the strike price of $10, and the contract price or premium price of $75, which would be the ask right now. If I did a market, it would just execute it, or I could do a limit and sell it higher, which you can do limits and wait for price fluctuation. So right now I could hit market and get $75 to put up $1,000 collateral and give someone the option right now of selling me their shares, 100 shares at $10 anytime now until October 16th. Now I collect this $75, it goes right into my account and it is mine regardless of what happens, and I can use it right away to buy more shares or leave on the sidelines or take out. If this contract does get exercised, say CleanSpark went down to $8 or $9 a share and this got exercised, then I would still have to buy these at $10 a share. That is my downside. That is why these people are buying these contracts, because they have the option to put these shares onto me at $10. So I do this with stocks that I like. So if this option does get exercised, then I just own a good stock at a lower price. But anyway, expiring worthless, you just collect premium and it expires and you go about your business to write another contract or whatever you may do. So this is one way that I make some passive income selling put contracts in the stock market. So this was a demonstration on how you would sell a put contract for passive income. It's one of my favorite strategies. I do this a lot to buy stocks that I want to own. And once again, I am not a financial advisor. I am just a kid on YouTube doing this for fun. So please, with that being said, I'm Cullum Costello. Like and subscribe, and please leave a comment down below. Let me know what you think about options, or just leave a comment of your choice. Thank you very much for tuning in, and go out and get money.